Topic: Bank reconciliation statement. The bank reconciliation statement is simply a statement that is used to reconcile the differences in the cash book balance and that of the bank statement. If I have transactions with the bank, anytime I deposit money with the bank, there is this tendency that my account may be recorded as a cash account, while transactions may not be recorded at the bank. Therefore, the discrepancies can actually occur. But we have various reasons why the balances at the cash book level will not be equal with the balance at the bank statement. We have reasons like unpresented check. These are check issued but is yet to be tendered for payment at the bank. Therefore, it will only reflect on the cash book, but it will never show on the bank statement. They will also have reasons like uncredited check. These are check issued and paid into the bank, but has not been treated by the bank. Most times it takes a week or probably some days before some checks are treated. So as a result of that, we may have such differences. We also have bank charges. These are commission charged by the banks for certain transactions carried out on behalf of their customer. We have other reasons like standing order. Standing order is simply an instruction a customer gives to his bank to execute some functions or some activities on their behalf, which is normally being paid either by commission or probably the bank will immediately debit the customer's account, but this may not reflect on the cash account. Therefore, the differences may occur. We also have reasons like credit transfer, where cash or money is remitted into someone's account without being notified. I can transfer money into someone's account at the bank without informing the customer. Such transaction only appears on the bank statement but will never occur on the cash account. We also have reasons like dividend. Dividend is simply reward on investment in form of shares and securities, which can also appears on the bank statement but may probably not appear on the cash account. Then the last aspect is dishonored check. Checks are most times dishonored by the bank for the following reasons. One, when the signature in the signature in the check are not the same. Every check has two portions for signatory. If the signatories are not the same, the bank may reject such check.
Can you take this last one again?
Okay. This dishonored check can be dishonored for the various reasons. One, irregular signature. On the check, you have two portions for signatories. If the signatories are not the same, the bank have the authority to reject such checks. And secondly, we have insufficient fund. That is, the account holder may not have enough capital to pay you and maybe mistakenly or deliberately issue you a check above the actual amount he has with the bank, and that may also result into the bank rejecting it. Most times we regard this as a bounce check. That is, when a check is bounced, it simply means that the customer that issued the check does not have enough capital in his account. Another reason for check being dishonored is the expired check. A check issued to be paid for today, for instance, may probably not be taken to the bank for payment and probably be taken 2 or 3 days after. Such checks may either be rejected by the bank. They will also have a stale check. We have post-dated check. They will also have some banks actually do not accept their check being folded. If you fold some banks check, they will actually reject such banks. So if a check booklet is issued to you, you need to present such check book to the bank the same manner of within which you were actually issued the check. So there's no need for one folding the check before payment. So you just have to be very careful when you are taking such checks to the bank. So these are some of the reasons why checks are dishonored by the bank, and also these are the reasons why we have differences in the cash book as well as the bank statement. But for us to be able to prepare an effective and an appropriate bank reconciliation statement, there are a series of layouts as in format that the student must actually study. The layout is like a guideline. If you have knowledge about the layout, you'll be able to work with bank reconciliation statement effectively, as long as you understand those reasons. We have layouts that actually involve something like overdraft. Overdraft is a kind of a permission that the bank grants to a customer to withdraw more than his or her bank balance. That is, if I have something like 100,000 naira in the bank and I needed something like 400,000, I might apply for an overdraft, but there are conditions within which the bank manager will grant you such credit facility. For instance, if you are not a credit-worthy customer, a credit-worthy customer is someone who obtained a credit facility, promised to pay at a certain date, and actually fulfill his promise. But if I obtain a check or an overdraft from a bank and promise to pay at a certain date, and when that period now comes, I delay in the payment, I may not get such opportunity next time. Therefore, for you to be able to be given an overdraft or be permitted an overdraft, you must be a credit-worthy customer. And there are other reasons before the bank manager may actually grant you that opportunity of withdrawing more than your bank balance. Okay, we have a layout that actually affects what we call adjusted cash book. The cash book given to you in your question or in your exam may not be correct, and the examiner may ask you to adjust the cash book. The cash book also have its own comprehensive layout that you need to study before reconciling any statement or trying to find the differences or solve the problems between the cash book balance and the bank statement. Then we have, most times in our exams, questions may come this way, where the questionnaire or the examiner may give you two different accounts. That is, at the same time, you have an account like the cash account and the bank statement. How do we reconcile the difference is this. If we look at the debit side of the cash book, we need to compare it with the credit side of the bank statement. Whatever is in the debit side of the cash book that is not in the bank statement may be one of the reasons for the differences. Or, however, whatever you have on the credit side of the bank statement and does not appear on the debit side may also be assumed as the reason for the differences. The same thing is also applicable to the credit side of the cash book, which is also used to compare with the debit side of the bank statement. The debit side of the bank statement, if there are informations therein that is not there on the credit side of the cash book, we can also assume that as what? As the reasons for the differences. After deducing the reasons, we can now still make use of our layout in order to reconcile the differences in the balances between the cash book and that of the bank statement. This is the end of the topic.